On the headline, expected up 0.2% for our consumer price index July read, unchanged, double goose eggs, 0. And last month, of course, up 1.3. That's the highest level since 2005. If we look at ex-food and energy, up 0.3, also less than the 0.5% anticipated, and less than half for the rearview mirror, which was up 0.7. The high water mark here, folks, goes all the way back to April of 2021 when it was up 0.9%. Now, the year-over-year numbers. Year-over-year headline up 8.5. This is the one I was a bit nervous about. In the rearview mirror, it was up 9.1. 9.1, that was the highest since 1981. 8.5 brings us back to levels we haven't seen since just April of this year. And finally, ex-food and energy on the year-over-year outlook, up 5.9, expected to be up 6.1. It equals our last look, which was up 5.9. High water mark here was in March, where it was up 6.5, the highest since 1982. And if we look at what's going on with interest rates, they are falling. And for a change, we have a bull steepening going on. Bull steepening, meaning prices are rising, and that's pushing short rates down almost twice as fast as long rates, but all rates are going down. We're down almost 16 basis points in a 2-year. We're down about 10 basis points in a 10-year, and it underscores the Fed, by its very nature of ill forecasting success, is reactionary. The market's not, and the market continues to do what it's now done for weeks and weeks, and that is long rates are moving down. It believes that transient ultimately will be the correct word. The problem was the time frame. Melissa Lee, back to you.
What a rundown, Rick. Thank you. In a nutshell, cooler than expected across the board versus consensus estimates, which seems to lend some credence to the notion that the Fed could pause. We're seeing futures rise very sharply. Rick had mentioned the decline, the sharp decline we're seeing in 2s and 10s. We're seeing a sharp surge in the futures. Right now in the NASDAQ, we're looking at about 320. S&P looking to be up by about 72.5, and the Dow's looking to add more than 400 points. Steve, what's your initial reaction here?
We did get the pop in services that I was concerned about. The owner's equivalent rent, which is the proxy for housing costs, rose actually more than expected, up 0.7%. Services less energy, up 0.7%. That's a big part of the index, both of those things, and they're rising relatively quickly. It looks like there was a little bit more fall off in the energy prices. I'm not sure why we didn't get the services pop. I think you're right, though. I think the market is right. This means quick reaction. I'm not sure the Fed can do 50 on the back of this. I think they still might do 75, but it could suggest some attenuated rate increases down the road. Jason Furman has an interesting piece with which I somewhat disagree about his concern about productivity from yesterday's numbers. And that's going to be also important for the Federal Reserve. It's a bit of a wonky conversation, but it's very central to how we live our lives.
If you want 12 free stocks, Webull is going to give you up to 12 free stocks. When you open up a new Webull brokerage account, put at least 1 penny in that account, they're going to give you 12 free stocks valued all the way up to $30,600. So after the video, I want you guys to go down to the description box of the video, click on that Webull link, open up your new account today, go get that free stock, go get that free money. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.